Uh, Thank you very much to the organizers first for inviting ICIS to present at this seminar. For those of you all who are not familiar with ICIS and what we do, we are a global provider of market intelligence, data, pricing, consulting services across the energy, chemicals and fertilizer industry. We're of course present here. We're at booth D21, so do come over and we'd love to have a discussion with you all. So over the next 30 minutes, what I'll be doing is exploring what's been happening in the markets for a few surfactant raw materials. Look at the price trends, how they've evolved over the last year, what are the key drivers behind what's been happening in the markets, what's the demand and supply situation, both near term as well as the longer term picture. And then I'll close with some broad industry trends that we have to watch out for. I'll be focusing here on three main products. That's linear alkyl benzene, fatty alcohol ethoxylates, and fatty alcohols. So we'll start off first by taking a look at what's been happening in the fatty alcohol market. So this chart here shows the C12-14 price trend from January of 2016 going up into 2019. And you can see very easily that generally alcohol prices have been drifting downwards through most of 2018, and that trend has persisted going forward into the first quarter of this year. On an average, prices for 2018 were down 30% over 2017. They came in at below $1,500 per ton, while for the first quarter, what we are seeing is another 14% decline, and prices are down at about $1,280 per ton. A diverse set of factors have actually been guiding this price movement. First, if you go back a bit, going into 2016, when we saw that upward movement coming in, one of the key drivers then was the El Nino factor, which caused a significant rise in palm kernel oil prices, and because of the production impact that was there on palm kernel, and that in turn propped up the C12, C14 prices. Fatty alcohol prices breached the $2,500 mark to hit $2,700 by the end of 2016 and early 2017. Now the following year, we saw a recovery coming in terms of palm oil production. That put a downward pressure on prices. Towards the latter half of 2017, we saw a brief recovery when operating rates were cut down and there was some plant shutdown, so that brought in some support. But through almost all of 2018, what we are seeing is the persistent softness in PKO prices, providing little support to fatty alcohols. So if you look at what's been happening in the PKO market, let's see what's in store here. PKO prices were down 27% last year, and they've been down by another 26% so far this year. So average prices for Q1 were about $680, and that's at a far cry from what we saw in 2016-17, when prices had hit a high of $1,800. So what's happening in this market? It can be traced back a few years when bumper prices led, of course, to higher cultivation, production. And additionally, now what we are seeing is, this is a period when coconut oil prices have been trending lower, and this has prompted a shift in the market. Because as you know, in Southeast Asia, fatty alcohols are produced using either palm oil or coconut oil as a feedstock. Coconut oil-based fatty alcohols were less competitive, but the recent decrease has meant that they are more viable. The current projections suggest that coconut oil prices could start moving up in the second half of the year because this is towards the end of the harvest cycle, which lasts for about 2 to 3 years. So this could in turn then prompt people to turn to PKO. But having said that, PKO stocks are still quite high. And despite an increase in production or offtake, the stocks are persistently remained at a higher level. So this could in turn exert pressure on PKO as well. Unless there is any sudden surge in PKO exports, which could then provide support to PKO. Turning now to demand for fatty alcohols, what we are seeing is that globally, about 55% of fatty alcohol demand is from the soaps and detergents segment. The other noteworthy segments are personal care and antioxidants, with each of these segments accounting for about 10% of the total fatty alcohols demand. From a geographical perspective, we see Asia Pacific as the largest consumer, and that accounts for about 35% of global demand for fatty alcohols. The demand prospects are good, with this segment projected to grow to about $7.5 billion in value terms by 2022. The developing economies will be a major contributor as middle-class populations in countries such as China, India, and Indonesia rapidly expand and drive consumer demand for a whole range of personal care products. On the supply side, around 80% of the global fatty alcohols production can be found in Southeast Asia. One of the big issues, of course, for the industry is the overcapacity that's built up, and that's primarily due to the very aggressive expansions that were brought on stream during 2015-2016. So if you look at what's been happening in terms of expansions, you will see that globally, fatty alcohol capacity has grown from 2.6 million in 2013 to about 3.6 million in 2016. So that's about a 40% jump. But if you look at what's happened in Asia Pacific, over here you see capacity has gone up from about 2 million to 3 million, so nearly a 50% jump in capacity. Indonesia has the largest capacity at about 1.2 million, and then you have China and Malaysia with capacity at around 600,000 tons. Now this overcapacity in the industry is expected to persist for a few more years because a lot of capacity has been built up ahead of demand. There have been some losses, there have been some plant shutdowns taking place in China. This is primarily due to the stricter environmental norms that have kicked into the country. Greater pressure now on companies to comply with environmental regulations. Plus, of course, we are seeing some lower operating rates across Southeast Asia. So this should help bring back a bit of balance into the market. The other side to the story, of course, is that natural alcohols have become more attractive vis-a-vis synthetic alcohols. And this trend could continue, especially if crude oil prices remain firm. Southeast Asian fatty alcohol producers are also seeing greater demand coming in from Europe. And this follows initially the force majeure that was declared by Shell at their plant in Europe. And then, of course, they have now taken a decision that they will not restart the plant and they will mothball the facility. Overall, in terms of fatty alcohols capacities, we are not likely to see any major capacity increase There are no near-term expansion plans that are coming up in the next few years. So moving to fatty alcohol ethoxylates now. If you look at the regional prices, both for China and for Southeast Asia, they seem to be trapped in a downturn since the early part of 2018, and they're currently at the lowest levels in 2.5 years. Across the first half of 2018, C12, C14 prices were the key influencer for ethoxylate prices. And as mentioned, the alcohol prices were in turn driven by what was happening in PKO markets. Some of the other factors that briefly influenced the ethoxylate market was the VAT reduction that we saw in China. That fell by 1 percentage point. So for a brief period, what this meant was that import prices became more attractive. They had a slightly more competitive edge compared with domestic prices. So that kind of supported the market for a brief while. In the third quarter of 2018, we saw C12-14 prices rebound briefly. However, many of the market participants were cautious because this was also the time when you were seeing a fair bit of volatility in the currency rates across various countries in Asia, which in turn was being influenced by the onset of the trade war between US and China. Now, this trade war, of course, had an influence across the wider chemicals space, but what we also saw was that Chinese importers preferring local product over imported product because, of course, this ensured faster deliveries and lower currency risks. In the fourth quarter of 2018, both alcohol and ethoxylate prices dropped, and also ethylene prices dropped during this period, which had an impact on the ethoxylate markets. Overall, on an average, ethoxylate prices were down 5% last year, and they've fallen by another 10% in the first quarter of this year. So, looking ahead, the recent drops that we've seen in C12-14 will continue to have an impact on ethoxylates, especially because the upstream PKO stocks are quite high in Malaysia and Indonesia. They're hovering at about 5-year highs is what I understand. The peak harvest at the palm plantations is expected to start in July. The outlook, though, is a little uncertain because some analysts believe that 2019 could see the onset of El Nino, so it could be another El Nino year, resulting in extreme dry weather conditions that's detrimental to palm harvest. And then according to some reports, as I mentioned earlier, coconut harvest could slow down in the second half of this year, lifting coconut oil prices and providing support to PKO. If you look at what's been happening on ethylene and ethylene oxide, that's likely to be under pressure this year. We are seeing some expansions in ethylene capacity kicking in during the second half of the year, new capacities coming up in South Korea and China. The timing of the commissioning of these facilities would be very important to monitor because that in turn is going to be influencing the ethylene prices. In terms of ethoxylates, what we're also seeing is that producers have been focusing more on their home markets because these have been offering better realizations than the export market. And the other thing to watch out for is the performance of the other ethylene oxide derivative markets because some of the integrated producers can switch. They would depending on which of these ethylene oxide derivatives offers the better realization. So products such as nonyl phenol ethoxylates or polyethylene glycol, these are some of the other derivatives that need to be monitored. In terms of new investments in ethoxylation capacities, Sesol is due to commission a fairly large 150,000 ton per year plant in China this year. Next up is the Shale Gas Led Investment, the announcement coming in from INEOS in the US. INEOS had initially announced that they would build a new EO plant of about 200,000 tons and matching EOD capacity. More recently, they have said that they will scale up the capacity of this plant. It's going to go up to now a little over 500,000 tons, and that is slated to come on stream in 2023. The other big announcement coming in from BASF, which has signed up with the Chinese government for building a new, what they call as the Verbund, or the integrated site. This is going to be in the Guangdong province in southern China. They're planning a huge steam cracker capacity of at least 1 million tons, and then of course a whole range of products geared towards the consumer markets. Feasibility studies of course are on, and if feasible, the first of the plants of this project should come up in 2026. So let's move on now to linear alkyl benzene and take a look first at the price trends. And as you can see here, they've almost followed the broad direction set by the feedstock markets. Prices generally moved up over 2017 and 2018. They followed the upward trajectory that we saw in crude oil prices. This was halted in the first quarter of the year when the LAB CFR India prices actually declined by about 9%. They have moved up a bit in the recent weeks though. If you look at 2018, you will see that Indian prices were fairly stable, and demand was consistent demand actually coming in right from April to September, and very little fluctuations actually seen during this period. Post-September, after the monsoon, we saw some demand pickup coming in, and higher discussions and trade levels coming in, and this was despite the depreciation that we saw in the Indian rupee. Subsequent to that, there was a bit of a slowdown. There was some destocking activities taken place, and of course we also saw some declines kicking in during this period on the feedstock prices as well. Looking forward, the outlook is cautiously bullish as demand is expected to come back, and some support could also come around from the feedstock markets. We've seen the steady rise in Brent crude prices. We also heard earlier on the outlook for crude oil, which suggests that things could be firm this year. There are a few other factors that are worth keeping in mind when it comes to LAB. This includes currency movements. We saw the depreciation take place, the appreciation of the US dollar against a basket of currencies last year, and that did have an impact on the markets. And also things like tariffs. The trade war has had an impact also on the LAB market. And of course, as all of you all know, we did see India imposing anti-dumping duties back in 2017 against China, Qatar, and Iran, with duty rates ranging anywhere from 23% to almost 72%. Now, India is one of the biggest import markets in the world for LAB, and last year the country imported around 210,000 tons. I'll talk a bit more about trade flow in a couple of slides. What I'd like to look at first is the global demand and supply situation for LAB. Now, nearly 98% of LAB goes into LAS, which is used in synthetic detergents. There are certain other smaller applications for LAB, such as in agrochemicals, emulsion polymerization, wetting agents, solvents, etc. Globally, you will see that capacity has steadily moved up from 2015. In 2017, the global capacity was a little over 4 million tons. Consumption was lower at about 3.7 million tons. So there is plenty of capacity available currently to service demand. Asia is the epicenter for the LAB industry, both in terms of capacity and demand. The other major region in terms of capacity, and which is very relevant to us over here, is the Middle East. Global growth is also going to be coming in from Asia because China and India and the other developing economies in this part of the world are going to offer significant opportunities from a demand perspective. North America and Europe are going to be seeing more stagnant markets. In terms of expansions, what we have is two new capacities that have been announced in the GCC region. One in Saudi Arabia by Farabi, and the other one by ADNOC in the UAE. So ADNOC is planning a 150,000 ton plant along with a normal paraffin capacity. And then Farabi is going to be expand its position in the LAB business with a 120 KT plant that is expected to come up in 2020. Farabi, incidentally, currently operates a 140,000 ton per year plant. In addition to that, Cepsa has announced that they are going to be doing an upgrade project at their plant in Spain when they'll expand their capacity by about 25%. So let's take a look at the market as a whole for LAB. Draw your attention first to the chart on the right, and what you have here is various countries plotted against their overall demand for LAB and their growth prospects for LAB. What's very clear here is the two largest markets, China and India, are also among the fastest growing markets. There are a few other countries which have faster growth rates, but on a very small base. So I think from our perspective, what's very important is China and India. Both these countries, demand is expected to be growing anywhere from 4 to 5% per year going forward until 2025. So by 2025, China's demand is going to be around a little over 700,000 tons, and Indian demand is going to be around 780,000 tons. So India is going to be, for a change, a bigger market than China. No new capacity announcements in China, and even in India, we are not seeing any major announcements. Indian Oil, though, has announced that it will increase its capacity at its facility in Vadodara. That's going to go up by only about 35%. So if you look at this chart on the left, by 2025, there's a small box here which is shaded, and that bit represents the incremental capacity that's got to come in by some producer to kind of balance the global market. But even if this capacity does come in, India is likely to remain a net importer of LAB, at least for the foreseeable future. So let's take a look at the trade flows, the global trade flows for LAB. And what you'll see here is there are two regions which are the biggest deficits for LAB, and that is Southeast Asia, or Asia Pacific as we call it, which includes India, and the other one is South America. Asia Pac, which excludes Northeast Asia, China, and the other countries, has a deficit of about 450,000 tons, and South America at about a little over 100,000 tons. A smaller deficit seen in Africa at little under 50,000 tons. The big surplus markets are Northeast Asia and the Middle East. So these are the regions that are going to be servicing the demand from the other parts of the world. There have been some shifts to the LAB trade flow post the introduction of ADD. So what we now see is South Korea emerging as a supplier into India, South Korean producers trying to expand their share in this market. And then, of course, you have trade flows coming in from Saudi Arabia and also Thailand. If you look at the rest of Southeast Asia, of course, you do have production taking place in these markets, both in Thailand and in Indonesia. But these countries, Indonesia, for instance, is also an importer. It's a net importer. And the other big importer in this region is Vietnam, which takes in a little over 100,000 tons every year. So looking ahead, I'd just like to wrap up by highlighting some of the important trends that we are seeing in this world of surfactants. First of all, there is increasing regulatory and environmental considerations. This is here to stay. This is happening across many countries. And of course, what's most significant to us is what has happened in China, which has been enforcing compliance in a big way. And this has implications for plant operations across the surfactants value chain. Second, there is a move towards production of sustainable surfactants, which represents an opportunity for fatty alcohol-based products. Third, as income levels rise, there is growing consumer demand towards more high quality or more convenience-based products. And this would include a shift from liquid-based detergents to powder-based detergents. Consumers are also looking for sulfate-free surfactants in their personal care products, and this would mean using lesser SLS or SLES in these products. So while there's a rise of the middle class across China, India, Indonesia, which offer more disposable income in the hands of this population, and there's also growing awareness and a shift in consumer mindsets towards what we're already seeing in the developed world. So all of this represents both an opportunity and maybe in some cases even a threat to certain existing segments within the world of surfactants. Thank you very much for your attention. As I said, we are here, D21. Do come over and meet us, and happy to have a conversation over there.